Hey, welcome investors to the 40 Finance channel. We've got some pretty significant melting down here today, particularly in the afternoon actually. As we look at the front of Yahoo Finance, you have the NASDAQ down 2.82%. Right before I pressed go on this, it was at 2.9, I think. S&P 1.5%. These aren't gargantuan drop-offs in terms of historical metrics, but in terms of what we've seen lately, it's definitely notable because we've already had some pullbacks, particularly in tech stocks, NASDAQ as a whole. Now, the thing that's interesting a little bit today, granted it's just tiny, but the Dow 30 at 0.7% or so off. That was one area of strength as we saw while tech was losing ground. We did see some of the big dogs in the world, aka Microsoft, Amazon, Nvidia, etc., Tesla. They were sort of holding their own and keeping the Dow 30 afloat. So if you were a Dow investor and arguably even S&P investor for a while, you probably haven't even noticed some of the pain that's been going on in tech and the growth names. But if you've been over here in small caps, holy cow, small caps, it's just been brutal since about Thanksgiving. And you should know this if you have any stocks. I mean, it doesn't really matter about the price, but most of the time small caps are going to be like under $30, $20, stuff like that. Some of them, it's based more on market cap, but you know what I'm saying. If you have those cheaper stocks, you've probably felt that in the past month or so as well. I also just took a look before I came on. Let's see if I can get it to show. Bitcoin is at 46. I would say with Bitcoin, anything into 43 or 42 would be noticeable. It's kind of hovered between 42 and the high 40s here of late, despite all the meltdown. So if you saw Bitcoin in any way get to around that 40 mark or gee whiz into 39s, then that would be a pretty noticeable sell-off, in my opinion, and could be the indicator, in many other assets as well, that people are just bailing, at least for the short term. I'm not, I sort of believe in some long-term aspects for crypto when it comes to the big dogs, Bitcoin and Ethereum, but it also wouldn't surprise me, frankly, if $10,000 to $15,000 shaved off the price of Bitcoin, and that could be a buying opportunity depending on your beliefs. This Crypto 200 that I'm not super familiar with, I'm guessing it's market cap weighted. Look at that, almost 5% down. Let me see if I can pull up my coin market cap. Here's the ones that I watch. Let's see, is this going to show up? Yep, there we go. Sorry, it takes me a second to figure it out. Now it's showing a price of 44,379 right now on coin market cap. I'm not sure which one's more accurate. Ethereum 3,600, Solana 158, XRP, Dogecoin, and Voyager. I'm watching this Voyager one. I'll do a video on it at some point. If that gets down really cheap, I don't know what the hell the Voyager coin is going to be good for in the future, but I'll tell you one thing. If you invest on Voyager, which is what I've been using, if you have so many of their tokens, you get these bonus rewards. So I've been kind of watching that, like not even knowing what its utility purpose is, because I would buy some of those coins just to step up my crypto rewards that I have going on in there. But that's a video for the future. Let's go back to today, and I'm going to switch over the speculation here. This is SeekingAlpha. The speculation on this afternoon dip is this Fed policymaker minutes that came out. So they met behind closed doors, and this was on SeekingAlpha. They do a pretty good job of just doing these bullet points. By the way, my affiliate link for Seeking Alpha is down there, which includes a discount on an annual subscription if you're interested. But let's get to the facts here. Federal Open Market Committee might start normalization through raising the federal funds target rate range, then shrinking its balance sheet in a gradual, predictable manner. Stronger economic outlook, higher inflation, and larger balance sheet than was the case. Here we go. Could warrant a potentially faster pace of policy rate normalization. So I'm guessing that, that's where the freak out is. As in previous normalization, changes in the target range for the Fed's funds rate should be the committee's primary means for adjusting the stance on monetary policy. Blah, blah, blah. Anything else in here that's good? I mean, we're still talking about doing stuff, right? We're still not doing things. We're just talking about it. And that's where I get a little bit impatient. They prefer that because less uncertainty about the effects of changes in funds rate on the economy than about changes in balance sheet. So, the short version there, and I'm not the economist, they're putting the pain on interest rates as opposed to, alleviating perhaps their own debt problems. Makes it interesting. I'm not smart enough to figure out which is the better way, but we do know that if the funds rate goes up, that would obviously impact interest rates, and then you start to get into this world that you see today, which is higher volatility for investments that don't have as predictable of a return, certainly not rooted in EPS, etc. And then the fact that some people, perhaps even the bigger investors, when you think of hedge funds, etc., who have a lot on the line to deliver returns for clients, they'll pick up a bigger chunk of their money and they'll move it to other things. Whether that's REITs, I mean, I would think that it's very unlikely that it's bonds, but they could go to REITs, they could go to dividend stocks, they could move in a lot of different ways in this atmosphere, and that's where you see things on the high volatility side or the low earnings to no earnings. That's where they lose their support. You and me selling pick a stock Square, you and I selling Square in our meager holdings doesn't even, it's not even a blip on the radar, right? But when a hedge fund or a pension fund has $5 million worth of Square, or insiders have that amount, and then they sell, well, then it starts to put some pressure on the stock a little bit. So, all right, I'll stop there because I want to say hi to everybody and do your questions if you have any. Let me see if I can get back to the market. There we go, 2.92. I want to double check that crypto price. Yeah, they're still showing 46. That's surprising to me because I would have guessed that coin market cap would be more accurate, but, shows you what I know. All right, who's all here today? Lion, what the heck? This is great. Oh, great jobs report, great payroll, stupid Wall Street. I think Lion, those Fed minutes look to be the ones that are impacting the most here, is my guess. Also, Merry Christmas, Happy New Year. Glad you had a good stretch there, Lion. Love this time of year. Vancouver doesn't get much snow, and we're not that cold during winter. I would have never guessed, but you got a nice snowstorm. I'm shocked, not knowing anything about Vancouver. If we ever have healthy days again, maybe I'll come up and check out that city and try to say hi to you. I've never been to Canada, never been across the line. So I've been to the Upper Peninsula of Michigan. I've been out in other spots that were close to Canada. I live in Ohio, so some of the bordering areas, but never been to Canada. And Lion, if you think about it, since you are in Canada, Take a look someday at the Voyager stock that's on the Toronto, I believe, Toronto Stock Exchange. I'm sort of curious to hear a Canadian's opinion on it. If you think that it is, I don't know. Never bought a stock on the Toronto Stock Exchange, and it costs me extra to do so. So I was curious if you have any, crypto interest. Would you consider buying some of that, at a very small level? All right, Derek, how you doing? Licking my chops. When Google is down 4%, we're headed to hell. Dow 30 minus 0.76, man. You haven't seen that. That's nothing, but it's something. And what I'm waiting for, and actually we just hit it, QQQ at 386, that's only down 2.5%, but 386 is below my recent cost basis. So I think I was in the account today and I'm at 388. So this is a day, I don't know if I'll get to it because I'm doing this live stream. This is the day that I'll likely add 1 or 2 shares of Q as I try to very slowly build a position to 100 shares over time. Zillow down 6.6. With this one, I was looking, I've been trying to buy in the 50s lately, so that one's there. It has been holding a pretty decent line in the 60s, 61, 62, that's Gandhi. Magnite, I'm stuck in a 30-day lockout because I sold shares. Palantir, I did buy a small lot of 10 Palantir today under 18. That is a stock that fundamentally, if you watched my forward PE video yesterday, that might only be a $15 stock if people start really crunching the numbers, but I'll buy a little bit on the way down. Square getting destroyed, and I'm staying away from it for a while. There's no fundamentals that support this stock a ton, and I think you got to wait for a rebound on Square. I think they're coming in at $1.69 with a limited revenue growth next year. I'd stay away from it. I'm probably going to be bag holding this one through the end of next year. I almost sold it before tax time, but frankly kind of forgot about it. So I'll just let it sit for a while. Amazon, Derek brought up Google, which we'll look at in a second. Amazon, if we're going to have a major market correction, I'm interested in Amazon at 3,100 or below. TSM had a good week until recently. PayPal, I'm a buyer in the 180s, not a ton, but adding to my share count, onesie, twosie, anything in the 180s. I think major market correction, we could see 170 for PayPal, but it'll take a lot of stress to get it under 180 in my opinion. Rocket just holding, I'm not even looking at that right now, but I do still own it. Visa, I'm in a good spot again. Just holding. I'm 190. I bought a few shares when it was down that level. It should be pretty safe again at 220, but I don't think it has like massive upside. DraftKings getting tanked. I will double down on DraftKings, but I'm not in a hurry. Let's see where all this shakes out. And TJX. So that's me. I wanted to look at Google because Derek brought it up. What would be interesting about Google is the last time I looked at it, it had a forward PE in the 20s. See if that's still true. If this is true, and actually I'm going to skip this and I'm going to look at it in SeekingAlpha because you guys know I like that earnings chart in there. A little bit more accurate on the estimates in my opinion. Let me switch to annual. All right, forward PE 2665. Best I can tell, SeekingAlpha runs these calculations very close to real time. So this 2700 should be reflected right here. I'm not going to do the math to figure it out, but here you go, man. If they hit which equates to be only a 5% EPS increase next year, you're at forward P of 25, man, that's pretty hot. That's pretty hot for a long-term investment. And to Derek's point, you know, this stock's been strong and it's down 4%. Could be a lot to like there. Out of curiosity, Microsoft similar, 3.14. I wish SeekingAlpha would default to annual. That would help my life out quite a bit. But Microsoft more than Google for next year. Oh, Microsoft's in their current year. Microsoft a lot more than Google from a PE perspective. Very interesting. And then last thing I'll look at, and I'll do more questions, is Apple. Did they get touched today? Wow. It is untouchable, man. These guys are bulletproof. And there is nothing... I don't think Apple should go to 0, first of all, but there is nothing in Apple that I think is bulletproof from taking 5% off of it. But it's where it sits. I mean, it's a consumer products company, and you're in the 30s. Limited growth next year on revenue, single digits. That's just America's favorite stock, and probably not just America either. I will say let me see if I can find this. The buybacks in Apple are insane. I'm not even going to show it to you. You can look it up on your own. But what they've done on buybacks in the past 10 years is absolutely incredible. So look that up if you get time. Hey, Kevin, Happy New Year. Good to see you. Chachi, my Ford puts are printing. How far do you think this will drop? I'm surprised. Wasn't Ford just up yesterday, I thought? Oh, God. Wrong one. F. Okay, so minus 2.5%. I don't know when you put on that, but it's been on a run. Good for you. I don't know what to think of this run for Ford, quite honestly. They have, I'd have to break out on the GM side. I mean, you got a 13 on Ford P at the end of this year. Maybe next year it goes down. I know it's automobiles typically don't command a high PE. So hard for me to speculate where it would go. I could see it going down from here. I guess I would agree with you, Chachi, in the sense that how much higher does it really have? I think so, you know, maybe I am in tune to what you're doing. DH, Berkshire B shares. I've heard other people talk about that. As actually Josh Brown, one of my favorites on that halftime report. Very affordable compared to the A shares, at least for folks like me. And, you know, it is getting... It feels like we're getting into a sweet spot for Warren Buffett type investors. They obviously got just cranked from 2020 on, and a lot of criticism of Buffett in this past couple years. And, you know, he invests in things that I'm not particularly interested in, but, you know, no one should ever talk bad about his track record. I saw a Twitter post where a guy was like, you know, trying to show off or something about whatever he got, investment returns for 2021. And he was like, I returned 37% or whatever the number was. And he was like, better than Warren Buffett. And you know how Twitter is. They're dying for you to do stuff like that. And somebody was like, but did you make more money than Warren Buffett? And then everyone's like, yeah, that's the key. That's the key. So, you know, Warren Buffett can make 0.005% and blow away the best year of my stock market investing career, just because he's starting with a hell of a lot more than I am. All right, Lion, $4 trillion on the sidelines, waiting to see. So I agree with the stats that we hear about sitting on the sidelines. What I guess where my mind goes, and $4 trillion is a ton of money, don't get me wrong. I think that the investing landscape is changing right before our eyes. as far as best opportunities. And guys and girls that have plus $1 million, it makes a big ass difference where they're going to go, right? So I talked earlier, I said something about, REITs become attractive, dividend stocks. If you're starting to manage at $1 million plus, which is probably the lion's share of the 4 trillion, individual accounts of $1 million plus, I don't know. I don't know where they go. Do they buy real estate? Do they buy dividend stocks, P&G, Dow, because it's guaranteed. And when you got that much money, playing a totally different game than I am. I'm in a game of collecting and saving and long-term maximum gains. When you've got that type of money, your number one goal is A, don't lose any, okay? Do not lose any money because you should have just kept it in the bank account. Your second goal is to raise as much as you can with as little risk as you can. So of the $4 trillion that's on the sideline, it'd be interesting to know how much of that is in millionaires' pockets, right? Is it 10 people with a ton of money? Is it 100,000 regular Joes like me? It's hard to say, but I will say that $4 trillion, extremely unlikely that if it was all invested tomorrow, it would all be in the stock market. It doesn't mean it wouldn't boost the stock market, but I think people are maybe overlooking some of the other opportunities out there for big dollars that a person like me, can barely understand, to be honest with you. All right, Lion wanted Burke B, but he kept waiting. Now it's 3:15. AT&T, he also has AT&T, God bless you. And you've got that dividend now. I don't see a lot myself in AT&T, but I'm also not heavy dividend investor, certainly not in the stock account that I do here all the time because it is taxable, right? So don't mind dividends, and they're good, and particularly special ones that come out, but I'm not doing a taxable stock account that I feature on this channel to get dividends. You're obviously much better off to earn dividends in a tax-free account. Oh yeah, there's, hold on for a second, I see an end-phase friend. Will Tesla crash? I did that, Tesla was in my 100 PE 4P video yesterday, and I was surprised at how close it's getting to somewhat fair valuation. So down here, this goddamn quarterly is going to kill me. We have next year forward PE of 124. If they hit, they have outperformed almost religiously. So let's just assume they get to a forward PE of 100 by the time they report everything. That is in no way, shape, or form cheap for an automobile manufacturer, but I thought that it was relatively impressive considering where they started from 3 or 4 years ago. Will it crash? If I was going to do, actually, let's look this up on Yahoo. I would say a floor for Tesla in the worst world is like 800. And I wanted to look at this right here. Morningstar fair value of 700. Just because Morningstar puts that's a calculation. Much like my own calculations that I share with you guys, it doesn't mean it's going to happen. I would guess 800's a floor because of the support that it gets from the younger community. And not all just younger, but we just crossed minus 3% on the NASDAQ and other news. Crazy. QQQ, will we get to the 370s? I'd like that. I'd like that for myself. And I'm also watching PayPal pretty strong today because it's in the 180s. I think the way this is going right now, because I'm online with you guys, I probably won't buy anything else today. You know, I'll just wait and see if it continues going tomorrow. I mean, the thing about these end of the day meltdowns is more than likely overnight in an environment like this. You know, I don't want to jinx it, but you usually don't have, if you're down 3% in NASDAQ, you don't have a 3% upside before open. I can't imagine that. So I'll probably wait till tomorrow and think about what moves I'm going to make. I have to be careful a little bit. I got to make the most out of these crashes because I got about $6,000 on the sideline, so not a ton of money, and I have to make it count because, as you guys know, last year was sort of a lame duck year. If you don't know, I was down about 13%. I posted that video recently if you're interested. Derek, adding Adobe, Shopify. I've been watching Shopify too. I still feel like 1,000 is a good spot for it, but I won't argue their growth, and I won't argue their EPS. Let me adjust this a little bit. Actually, I'm just going to take it off to what I've been using. As much as I like Yahoo, I still feel like this SeekingAlpha earnings page is winning all of my love for 2022. Here's what we got. Shopify, if they hit, they'll be at 200 next year, which is probably underestimated, to be honest with you. But they were growing 30% EPS. I don't know what this is. I don't know why that's so low, and it's across 36 analysts. I don't know what the expectation is for next year. I would say this is down. If you get into Shopify today, below 1,200, I think as long as you're saying 3 years, they've outperformed enough. I think it's worth a look, and I'll put it right in the same boat with Melly. And most importantly, this plus 30% revenue growth. And as I mentioned on the recent video, these are projections. You can't quite put this down yet. You never know what's going to happen. But not everybody even has these types of projections. These are rare. 4 straight years of plus 30%, and Shopify probably has historicals dating back even farther. That's pretty rare, man. And you just got to find a price that you like it at, which obviously Derek has. And Adobe, that was your other one, Derek. Where did Adobe go? Because I heard on the radio coming into the office today that Adobe got smashed on something. Not too bad. I mean, 7%. It's not like it's, I've seen worse, right? Let's see what they're up to. 40%, or excuse me, P of 40. They are in 2022 fiscal year and double-digit revenue growth. So Adobe, I think, is definitely one. If you believe in their product line, it's worth watching. I noticed, too, that there's been some updates in a related manner on DocuSign for their projections. I think DocuSign's intriguing. I think it was way too expensive at whatever the hell this is, $300. But recently, some of their earnings estimates have been going up. And you see right here, in the 70s for that stock isn't too bad. You figure that when it was at 300, this would have doubled, right, roughly, and been in the 150s. So you're under the 100. Again, I'm not sure why you see triple-digit growth, 20s, 30s, but for some reason they're calling for this sub 10%. Very similar to Shopify. Somebody's right and somebody's wrong here. And I'm going to bet that this is low. That's what I would say, which would bring your forward P to a much more reasonable, let's say they could get down to 60s. I think you'd have to think about it. They're right in the same land as Adobe, plus 43, plus 25. Anytime you can get these kinds of numbers, over time you would have to speculate that the stock you bought is going to mature from where it is today at these numbers. Now, this is a little high maybe, but it is a software company. You get under 10 by 24, and if they outperform, you get there sooner. So we're starting to see some things that I wouldn't say are, I'd argue about them being on sale. I would say they're down significantly from woefully inflated prices, including stocks I own. I'm not ready to say stocks are on sale yet today. I would say with what we've looked at, obviously Google 25x earnings appears to be a pretty safe bet, I would say, at this point for today's price. And there's, I would never argue against Adobe. I would likely never argue against Shopify, although I think that you might see it go down more if there's more pressure. And who else did we hit? Berkshire. I mean, there's nothing. That's a very hard stock to study. Okay, so I didn't show revenue or EPS for that because it's a conglomerate. It's actually above my pay grade for kind of studying the inner workings of it. But, you have one of the best management teams, certainly, making the most value for their shareholders. All right, Apple long, unstoppable behemoth, absolutely. When I first started this channel in, I don't know, I think I was posting regularly by 19. I've seen Apple in the past 2 years. I've seen them be what I would argue is plus 10 to 20% overvalued at various times throughout the year. But you throw those billions of dollars of stock buybacks behind it, you throw a loved brand that's continually releasing new products, and it's hard to really sit at the bar and tell the guy next to you that Apple's overvalued. I mean, I used to think so to some extent, but now I'm like, nah. I mean, I'll never say it's too expensive. I will say that if you bought it to sell it tomorrow, you're probably in the wrong game. But if you're holding for 3 to 5 years or ideally longer, I mean, who's going to say that's a bad idea? That's just stupid. And you're not going to lose any sleep, right? You're not going to wonder if this is the new cloud technology that saves the world. No, you already know that when you go to the mall, 6,000 people that you pass have an iPhone in their pocket, and they're probably going to buy another one. So it's a good stock. All right, Derek is on fire today. Throughout everything, he's thinking about moving his mutuals to all Vanguard. I don't know what mutual funds you have, but I think it's been, I liked to listen to Jack Bogle, can't remember how you pronounce it, but he seemed like a really straightforward guy. And I always listened when I saw videos with him on CNBC and stuff like that. I'm not a huge expense fee guy. I'm more like, do I believe in what's going on behind the ETF/mutual fund? But the one thing that would be cool, Derek, assuming that it works for your situation, is you'd have all that stuff. I think you can do all that through the actual Vanguard platform, which I've kicked around and logged in and goofed around a little bit before. It's antiquated for sure, but it would be nice to have that all, in a place. I don't know if that works for you. Obviously, you can buy Vanguard funds on Fidelity or wherever you're at. John E, agree, ETFs are better. Mutual fund is also good if your employer offers that. Good call, Chestad. I missed the FOMC meeting. I tried to put that into like a word for some reason. Looks like it spooked the market, and we were covering it earlier there, Chestad. I was doing good this morning. Let me take a peek here because we just closed. See where we ended up. Minus 3.34. That's got to be one of the bigger dips in the past. Well, let's go monthly. It's hard to tell without the old candlesticks. Line. Oh, they haven't posted it yet on this one. Oh, yeah, they did. I just have to fix it. All right, so you had a bigger change right here. And, oh, this is monthly. 1 month, 1 day. There we go. So what was this one? Minus 288. This one, minus 339. That was over the past 3 months. Let's take a look at 6 months. It's going to be a hell of a lot harder to read. But it looks like that might have been the biggest dip. Is it the biggest dip of the last 6 months? I can't even read it. This one says 8.3%. I don't know. It's up there, though. It's up there. Certainly bigger in recent days. So it could be a buying opportunity. Mike Pfister sold all his stocks. He says this will end bad. That's crazy. Fly on the wall, current thoughts on Amazon. It's been going sideways for a year. Just to be fair, I own Amazon, and after it did go sideways for at least 9 months, I decided to jump in, and I'm sticking with it. I really liked the video that I made on Amazon, not to self-promote. It's probably like 2 months old right now, but I went through my particular thesis of how they built out their package delivery, their infrastructure, all the stuff they did. The reason that EPS got hit is 2 things, okay? It's obviously the investment they had to make for COVID reasons, but then somewhere, without announcing it, they decided to spend billions of dollars on the infrastructure for their logistics, right? Getting packages here and there, with the goal over time of getting to that 1 hour delivery kind of game that, you know, I'm not expecting that shit in 2022. Maybe it happens. They have 2 hour in Cincinnati, Ohio for certain grocery store items. I've never tried it, but how about 2025? Let's see, what's a good need? An auto part for, you know, let's say you're working on your car and you need a tire or something. Man, if they deliver that stuff in an hour, if they ever get to that point, holy shnikes. And I just don't see who can replicate it. Maybe Walmart, but they're still behind, right? You can finally check out on Walmart, which, you know, 2 years ago would have drove you silly. So my take on Amazon is EPS under pressure due to capital expenditures, due to COVID expenditures, may not be the best profit lines we've seen historically for, we'll see, maybe another 2 or 3 quarters. But by the back half of next year, I think you're right back into Super Bowl territory. So if you've been kicking Amazon around for yourself, you know, anytime you're seeing it closer to 3, and God forbid under 3, I think it's worth a chance. I really do. And I still feel good about it. That's, you know, for me this year, I will probably be unlikely that I buy more individual shares of Amazon. I only have like 3, but I'm going to be putting a lot into QQQ, particularly in the wake of this meltdown. So it doesn't make a ton of sense for me to hold Amazon much more than my 3 shares on an independent or individual basis. All right, great stock Vortex, IGV. I don't know that one off the top of my head anyway. That is an ETF for expanded tech software, which I imagine has gotten its butt kicked here. Let's take a look. And not too bad. That's a 1-year chart. 1 month is down, but not as really like for as much as SaaS is getting destroyed, at least the low profit ones. It doesn't look too bad. Let's see who's in this. Expense ratio 0.46. I think that's plenty acceptable in today's day. I think when you are eyeballing ETFs and expense ratio, everybody's going to have a different opinion. But I'm kind of saying to myself, let's keep it under 1% if at all possible. And if you get in these specialty ones that you have a particular bull case for, then 0.46 I think is in line. Trying to see what do we got in the holdings. All right, kicking off Adobe, Microsoft, Salesforce, Oracle. Oracle, who, by the way, is really turning around the financials of their company. I don't know that they'll ever grow much further, but it's an interesting play. These are all good companies. I mean, Activision and Snap are down. I haven't looked at Autodesk forever. I don't think Zoom's going anywhere. It was unfortunate that it went so high. Intuit, you know, massive consumer software business. I like the holdings. So yeah, there's probably worse plays in the world than what you got here. All right. Yeah, Shop, price to sales at 43 is tough. Great Vortex. You add into QQQ, price target in the 380s. That's for Jordan. How you doing? Which fintech will you buy? Square, PayPal, C. Right now, PayPal. Right now, PayPal. Now, I'm going to tell you something because I want to be totally transparent. I stack up fundamentals on this channel all the time. Okay, there is a chance that PayPal could see short-term pain down to 170. So if you're looking for bottom, I would say roughly 170. Horrific crash 165. So don't buy PayPal today because you see the prices went down and you think that it's only up from here. I think that they will regain their momentum, but it could go back the other way. Square, I'm not touching an inkling of Square until they show either a promising headline or a rebound. There's nothing in those fundamentals. 140, it's not then, it's all right, I guess, but they're on a cold streak, man. And a lot of the stuff that I think benefited Square, like stimulus and tax refunds into Cash App, crypto investing and such, that they're going to get hit because a lot of their client base is lower income. And maybe lower income might be a bad word, but I'll say below middle class and below. All right. And those people are starting to dry up a little bit in terms of their money supply. I don't think it's good news for Cash App. All right. We talked about Shop, price to sales, Lion, Enphase, and Roku. Yeah, Roku, I'm not surprised because if you didn't see the news, and here's a bull news for Amazon. Amazon announced that they have really taken off their Fire TVs, have really done well. Let's see if I can find the headline for you. There we go. Amazon sells their 150 millionth Fire TV, and somewhere in here, at CES, it's also announced deals with Ford Motor and Stellantis, who I had to look up, and it's some sort of like Italy-based, I don't know what they do. They build cars and components. So Ford and this company are going to have Fire TV in-car entertainment systems. That will mean embedding the video service in 2022 for Ford Explorer, Navigator, Wagoneer, Grand Wagoneer, Cherokee, and Chrysler Pacifica, assuming they can sell more than 1 or 2 units. So huge, and it takes Fire TV in a different direction, right? Because we're talking about automobiles. Roku, I think we all know that it struggles with its valuation. Today, you dipped under 200. This is a 1-year chart. Is that the first time under 2? 207. Might be the first time under 2 for a while, guys. That's a 1-year chart that we're looking at. You can't see it because I screwed it up. There you go. That's first time under 2 at the end of today. This chart only goes to 1-4. You see what's on the screen. Very interesting. Very interesting. And as far as end phase goes, you better believe I'll own at least one share of end phase because of all the people that were ripping me for selling. But it is not investable right now, in my opinion, at 157. It's on a cold streak. Usually these solar markets, as I followed them for about a year now, they ebb and flow like the wind. And the wind right now is saying wait and see, in my opinion. 117 is the low. Somewhere in here is where I sold out. I believe my cost basis is 185 when I sold out. So right now, despite all the hate I received, I could purchase Enphase Energy for less than my cost basis back then. I'll let it go a little bit farther before I do my victory lap, so to speak. All right. TX, MD, FDA approval. Ashley, good call. I don't do pharma stock, so I'll take your word for it that that's big news. Still positive. Chestad, still positive for the month. Sitting and not doing anything. I don't blame you. It's hard to reckon when this pain is going to end, especially since Dow 30 and S&P haven't really been touched, right? They're still flying high. Crypto getting crushed. We looked at it earlier. Where is it at right now? La-di-da. I'm showing Bitcoin at 46, down 1.28%. Crypto 200, down 5%. DC likes my artwork there. Thank you. Lion, those who would give up essential liberty. Oh, and Lion's coming in with the Ben Franklin quotes. Nice. Najee, VOM, RED. I don't know either of those. Sorry. Mad Reefers getting hit today. Oh, and Cool Vips is here. Stellantis, and I'm sorry if I'm hacking it. It's Fiat Chrysler Automobiles and French PSA Group. Thank you, Cool Vips. What about Snow? Well, let's see. I assume they're tanking like the rest of the database plays. Database, man. I don't know all the database stocks, but the Mongos and the whatevers, they're getting hit too, which I think it's just a valuation hit, right? Like there's no way that we don't see databases playing a huge role. And Snowflake kind of connects all those things. It's down to September 27th prices. This is going to be another one, though, that on my simpleton math is going to be very hard to figure out where the floor is. All right, so you remember the video yesterday, forward PE of 100, using that as a yardstick. Well, you know, it's not going to be an $8 stock. We know that. It's worth more than $8. But the earnings are not there, right? They're just not there to support it. So it just depends on how much you want to buy into the sales growth. And my guess is price to sales in the hundreds, okay? My guess is it's got further to fall. Even if you're a PS investor, I mean, gee whiz. It's hard to look somebody straight in the eye and say, found its floor at a price to sales of 100. I mean, even if they do hit plus 60% next year, nothing else changed, that would take your price to sales down to 60% of that would be price to sales of 40 next year if it happens. And price to sales of 40, guys, historically is not good. It's just not good. Now, you're going to find some tech companies that are down to 40 in this category, and they are going to look cheap because of how high they've been flying. You just have to pick what you can handle. All right, tomorrow is tomorrow more of the same? Hard to tell. I don't know. I wake up every day. So you had a big headline today with the FOMC meeting. Does that carry over? The bond market was closed on Monday. It opened on Tuesday. Things went up a little bit, but I'm looking at rates here in a second. They closed today at 1.7 on the 10-year. You know, anything close to 2, very close to 2, and I expect to see more pain at that level. And we haven't hit that yet. So I don't know enough about the bond market. They have auctions. I don't quote me, but I do believe the auctions are Tuesdays and Thursdays, or they're Monday, Wednesday, Friday. I can't remember. But that could be your next catalyst. Obviously, COVID is out there. You're looking for the bad news catalysts. And I have a feeling that after today, everyone on the message boards across the internet are going to say, I'm out, or I'm getting out, or I'm selling, this is crazy, blah, 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 blah. I'm not blowing my last 6K until I see more pain. I'm going to trickle in, like I said, on QQQ and go from there. But there's more room to fall on some names, not Google, like we looked at, probably not much on Microsoft. Honestly, as much as I was going on about Apple, they probably, best you're going to see is 10% on them slowly over time, minus 10%. That would be a dip for them. So I don't know. All right, guys, I just got a text and I got to go. Thanks everybody for coming out. I'll keep grinding through. This is in a lot of ways an exciting time, and I know it sucks when we look at our accounts, and if you don't have a ton of money to invest right now, it's even twice as hard. But I would argue that there's a ton of analysis to do at this time, particularly with the high growth names that have come down a lot, digging into them, seeing where prices are falling and trying to figure out where could they land. So Derek brought up Shopify earlier, and I haven't done this, but it would be very interesting to me to go back to 2019, 2018. Shopify's been around for a while, and see kind of where it was trading. They got a huge COVID boost. They got a huge implementation boost like every software did. What can we expect out of it from a valuation perspective? We'll all be guessing. Every one of us will be guessing, right? But it's good to go in and try to challenge yourself. And for a guy like me, I always challenge the downside more than the upside. And so this is a time of year where I'm almost happy, right? Because I'm always challenging the downside. So maybe spin your brain. It's much better to be the opposite of me. That is a, glass half full. Investors usually win because the market is usually up. But for at least a small period of time, be glass half empty and think about where it could go, because you could actually see the worst case scenario over the next couple months. And we haven't even had the rate hike yet, all right? We haven't had any rate hikes. The Fed has not come out and said 0.25% increase. That has not happened yet. I suspect it will by March. They've pretty much said it will. What happens then, right? So I'll have to see. But I appreciate you guys. Thanks for liking the video, subscribing to the channel. Always good to see you, and I'll have more to come this week. Take it easy.